What's up guys, my name is Richard. In today's video, I wanted to share my portfolio and share my game plan for 2025. So the goal of this video is to be as transparent as possible. Just want to show that it's not all rainbow and sunshine, and hopefully there's some lessons along the way that could help you in your yield farming journey. So if you're just getting into yield farming, or if you've been doing it for a while, then definitely watch this video. I think you'll be interested in some strategies that I have, and also like how the performance is doing for these pools. So the plan is to look at the big picture overview, break down some positions, go over the market outlook, and set a plan to tackle the rest of the year. So pretty clear here. My profit and loss is negative $40,000 right now. Looks pretty nasty, right? But the earnings is still beating impermanent loss versus just holding the assets that I put into the pools by almost $8,000, and I'm projected to make $3,000 something for the 30-day projection. And because the volume has been going down across the board, this might be like $1,000 to $2,000 for a while before it picks back up to like $3,000 to $5,000. And if you value my open position here in Ethereum, you can see I'm in profit of about 2.76 ETH, and in my closed positions I have 8.6 ETH worth of profit. And I was looking at this the other day, and I was pretty surprised to find like people that have been yield farming for years and longer than me. When I looked at like their open and closed position, they're actually at a negative ETH profit and also US dollar profit. Even if you're beating US dollar but you're not beating the ETH profit, it means that you could have just been holding ETH rather than yield farming, and you would have made more profit, right? So I like to compare ETH, comparing US dollar, comparing against holding. Obviously, if everything becomes green, then I'm in a really good spot. So I do like measuring against ETH, but I also measure against US dollar and against holding. And the long-term goal is to outperform all three, right? So as long as the alt market recovers, this negative 40,000 profit and loss hopefully turns positive, and we're gonna dive into these individual positions here. So the position I want to look at is Solana and ETH. It's beating impermanent loss a little bit. It's earning around 18-19% APR. And I actually entered this pool with purely ETH because I was providing liquidity for ETH and USDC. Then because ETH dropped in price, right, then I ended up with a bunch of ETH. So then I rotated to this pool. And you can see if I had just held my ETH that I got, I would have $2,000 something less, right? And I'm still up about $187 compared to the initial assets. So not bad here, underperforming Sol and 50/50 by a little bit. And in time, as long as nothing really bad happens, these would probably turn positive as well. So let me pull up the chart here. The entry is at 0.06, right? And these are my top two ranges. As you can see on the weekly chart, it's a pretty wide range. It's trading above my entry, so I do have positive ETH impermanent loss. If I wanted to exit this pool at any time and swap back to ETH, I would be in profit. And the APR is slightly low right now because there's quite a high concentration of liquidity from around 0.05 to 0.08 here. And I'm betting on the chance that it's gonna kind of knock these tight pool out of range so I could capture more fees when that happens. And here you can see the total ETH profit, pretty nice profit, 1.11 ETH so far. And let's look at the next position, ETH and MOG here. So MOG is a pretty big meme coin on ETH. Some people in DeFi don't like to provide liquidity for meme coins. I personally think it's fine as long as you stick to larger caps, you get good entry, and you limit it to a portion of your portfolio, like let's say 5 to 10% or more, but I wouldn't go crazy to like 30-50% of your portfolio. By the way guys, this is not financial advice. I'm just sharing my experience, and hopefully it helps you in some way or provides some entertainment. This position was actually averaging about 50 to 60% APR before I deposit more liquidity into it. So doing okay. It's beating impermanent loss by a little bit, but MOG has been underperforming ETH a little bit because the risk is still off. So after I compounded my fees from other pools into this pool, my average entry price dropped to about the 2657 mark, and you can see it's trading below that, but I do expect it to recover and eventually swing back up against ETH when people are speculating on memes again. And if you look here, divergence loss in terms of ETH is around 0.15 ETH, not a big deal. I made about 0.04 ETH in a month, and if I stay in range for a couple more months, it would most likely beat divergence loss. The next one is ETH and Pendle. This pool is actually doing quite well. You can see if you scroll down, right, it's beating all 4 categories. If I just held 100% ETH, 100% Pendle, 50-50 initial asset. So this is exactly what I want to see. It hasn't diverged too much from the initial entry price, and it has been outperforming ETH. So that's definitely a positive. So here you can see it's trading above my entry price. I expect it to get near or touch the top range here. When that happens, I might exit this pool and I'll see when the time comes. But as long as it's trading above your entry, if you're coming in from ETH, then you're in ETH profit. And I can just withdraw and sell everything at any time. So here, total profit and loss, 0.6 something ETH. So pretty good. And I like Pendle because it's like a cross-chain protocol. It gives you the ability to earn like fixed yield on your assets. You can look into it if you like. Be sure to do your own research before making any investment. But I like it because it's not tied to a particular chain, and as long as the protocol is growing, the prices are likely to grow as well. So the next one is Arrow and ETH. This one is barely beating impermanent loss, so not doing too hot. Still beating just 100% Arrow. If you look at the Arrow and ETH chart here, you can see it has kind of moved down from my entry by quite a bit, around 26%. So not a bad pool to actually invest more capital in if I expect it to trade above this level. I personally am bullish on the base chain, and I think as long as base grows, Arrow would grow as well. Only thing I don't like is that the token is inherently inflationary. When you're faced with this scenario, as long as I'm compounding my fees, my entry price is gonna keep dragging down, right? So as long as I'm bullish on ETH and Arrow, I would probably inject more capital in if I'm not overweight on this liquidity pool already. So the next one is really micro cap stuff. It's the ETH and Pixel pools. So Pixel is a very small gaming token. The fully diluted value is only around like 11 million right now. But I earn a decent amount of it from staking my Sappy Seal NFTs, and I also bought some at cheaper prices, so I'm happy to provide liquidity. And there's quite a few catalysts that are coming up in the next couple months here, so these pools should do decently well. You can see this newer pool I rebalanced into in January. It was actually a positive profit and loss. So the dollar profit and loss is not actually this much, but either way, it's still beating holding 100% Pixel. It's beating impermanent loss, just holding my assets, right? So as long as I think that Pixel and ETH are both gonna do well over the next 6 to 12 months, then it makes sense to reinvest into these pools or just hold these tokens. And let me show you guys the other Pixel and ETH pool that I entered in November 26th. So here it shows a negative profit and loss, right? Because Pixel and ETH has dropped in US dollar terms by quite a bit since last November. But you can see across all these metrics, this is what I want to see, right? It's beating holding 100% Pixel, 100% ETH, 50-50 of the asset, initial asset, it doesn't matter. So this pool is doing quite well. And I think it makes much more sense to think in crypto terms, especially when prices are down. If you believe that these prices are gonna recover because you're accumulating more crypto. So right now, my LPs are worth around like 47 ETH, right? Ethereum is trading under $2,000. And if my pool is worth, let's say, like 50 to 60 ETH from all these profits, then by the time ETH recovers to, let's say, $4,000, then I would have over $200,000, right? So that's the detailed breakdown of my portfolio and sort of the thought process behind it. I do expect Ethereum to trade above $4,000 again, so I'm fine accumulating my ETH. So before we go over the game plan, I think it's good to step back and look at the market outlook first, so that the game plan is kind of tied towards the market outlook. So the first thing I'm looking at is the stock market. You can see the stock market has been retracing a little bit if you look at the weekly chart. And I think that is mostly because of uncertainty and because of the tariffs and the trade war. And they're not quite sure if the Fed is ready to cut rates yet. So that's why we're seeing a little bit weaker stock market since around February. And you can see it broke down below this purple line here, the 200-day simple moving average. It flipped as resistance, and potentially it could drop further, or we might see it, reverse back onto the upside, form a double bottom here. But I think nobody really knows. Like if you look back here, the 200-day moving average became resistance, then we kickstart like a bear market, right? If you overlay it with Bitcoin, you can see it's highly correlated. And after the stock begin to trend up again, Bitcoin begins to trend up again. But just because it dropped below the 200-day moving average like it did, let's say in 2018, right, doesn't mean that the recovery wouldn't be sharp like here, right? It dropped for 80 something days before it reversed towards the upside. So that's potentially something we could see here. It's been since like the top, it's been like 38 days. If we drag out to 90 days, maybe in May we'll see some strength, and maybe we'll get some sort of rate cuts toward the end of the year. But again, still a lot of fear and uncertainty, and I just want to emphasize that nobody truly knows like what's gonna happen to the market. I personally don't try to time the market too much. I just see when things are kind of overvalued, I adjust my strategy a bit, but the medium to long-term trajectory is I'm still accumulating crypto. And I think now is a slightly different condition as what we're seeing in 2021. In 2021, we saw a lot of inflation, so the Fed has to increase their rates, right? And when the rates are high, it's really hard for stocks to move up because people couldn't borrow money, right? It's very hard to borrow money to invest or to grow their business. So you could probably expect like lower growth. But at the same time, we're seeing like pretty high valuation of stocks, like particularly tech stocks in the QQQ. So maybe it could correct further, but really I don't really know. But I think the market will trend up again once like there's some strength gained back on the SPX and QQQ and the risk on market is back again. So I want to keep an eye on the QQQ. I also want to look for Bitcoin dominance. It's been trending up and we haven't had like a proper alt season like we did last cycle, but we'll see if that happens, right? So when Bitcoin is this high, then like buying alts is quite attractive compared to just buying Bitcoin alone, right? And the last thing I want to keep an eye on is the stablecoin dominance, USDT and USDC dominance. When this is rising, basically a lot of the crypto money is transferring into stablecoins. So here is my strategy for 2025. Number one, I'm just gonna accumulate more ETH and Bitcoin and Sol at good prices when the swaps make sense. For example, if ETH is cheap relative to Bitcoin, I don't really want to swap a lot of my ETH for Bitcoin, right? I would prefer to swap my Sol or other altcoins that I get from the fees into Bitcoin if my plan is to accumulate more Bitcoin. So the next thing I want to do is I want to compound my liquidity pools. There will be some impermanent loss when you invest in LPs. So compounding like 50% is a good benchmark. It grows your earnings and also prevents you from like losing value over time. I'm gonna take profits into like any relief pump that I see, and then if there's a full recovery, I want to take profits even more. And as you see, my portfolio is all crypto to crypto pools right now because I think these alts are at a cheap price. I already deployed all my USDC. I want to keep accumulating these crypto, including Bitcoin. And then when the market is euphoric again, when everybody's celebrating, I want to convert some into crypto to stable pools, or I might run some delta neutral strategies when the prices heat up. This would essentially lock in like most of my profits if I shift to a more delta neutral strategy. So for like this month's pool, this is basically what I did. Sold to Ethereum. I put my Ethereum to the MOG and ETH pool, and then I use my SOL to swap to Bitcoin. As I was saying earlier, SOL to Bitcoin is at a better price than like Ethereum to Bitcoin, so I used my SOL for the SOL to Bitcoin swap. And for Pendle and ETH, I used my Pendle to swap into some Bitcoin. I used my ETH again to compound into the MOG and ETH pool. And for Pixel and ETH, I compounded Pixel and ETH towards the pool, and I had some leftover ETH from that. I also put that into MOG and ETH pool. For Arrow and ETH, I just compounded right into the same pool. I didn't grow my position for that one for this month. And for MOG and ETH, I compound into itself. So the reason why I put more funds into MOG and ETH for this month is because I want more meme coin exposure. And this pool has pretty nice APR, and it will probably pick up when the risk is back on again. So that's pretty much it for today, guys. Hopefully you got some value out of this. I certainly don't have answers to everything. If anything, if I lose money, I will share with you guys too that I lost money, right? And hopefully you don't make the same mistakes that I did. I think my strategy has a pretty good chance of making more money this cycle. But if the tokens I provide liquidity for don't do well, then potentially I could lose a lot of money. So I'll probably make videos like this every month so that you know what I'm working on, what my positions are, and hopefully we ride into some nice profit if the alt cycle continues like before. So thanks for watching, guys. Be sure to check out my other videos. It's going to help you become a better yield farmer, especially with concentrated liquidity pools. I'll catch you guys next time.